Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us the markets are showing no leadership and investors appear to be tired. Trends Journal publisher Gerald Celente comments on how stock markets around the world have fallen and how the U.S. market might echo that. He dusts off his crystal ball and gives us a glimpse into 2019. Reporting from Japan, the Corbett Report's James Corbett examines how the arrest of that Chinese telecom executive has put Canada right in the middle of the trade dispute between the U.S. and China. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, are we seeing the tax season rally on the markets, or is selling about normal?
Well, the selling pressure typically, historically, it comes to a head in the middle of December, and it usually has its greatest impact on stocks that have already been down on the year. People want to take those tax losses and use them against any gains that they might have had in other items that have been doing well. But this year, you've had the FANGs, which had been the leader right up through until the summer, Facebook, Amazon, Netflix, Google. They've also been under pressure. So what you've got here is just this market that has had no leadership to speak of for the last couple of months. Investors are very tired, and they've been liquidating at in the last week at one of the biggest rates that we've seen in the last few, many years here. So we would expect that usually around the 17th, the classic is that the small caps in the S&P would bottom around December the 17th, rally to January the 6th. Our work has shown that basically if you look for an oversold reading starting from December the 10th moving on, you can look to be stepping in then. And rather than holding out to the early part of January, which was the norm up until 20 or 30 years ago, more recently, it has paid to be for the short-term traders to come out about 10 days to 12 days into the trade, so usually just before year end. So the last few years we've had some bad first parts of January, so you want to make sure that you avoid those. The overall though, markets most of the markets are below their 200-day moving averages. The 50-day averages crossed below the 200, and you would expect us to get oversold fairly soon here, just in general. But because you've had that cross of the moving averages, otherwise known as the death cross, the 200-day moving average, which in most of the indices is around those early December or late November highs, that's going to be a very important resistance level as we move into the first part of next year. A failure to get through those decisively is going to lead to further selling. And as you know, we've been thinking that longer term, the 50-month moving average, which would be around the 22,000 level on the Dow, probably comes into play sometime next year.
How has gold been doing?
Well, gold has benefited from this choppiness that we've been seeing in the equity markets. And when you've had the initial breaks in the stocks, gold has benefited quite well. As the stock markets have been getting more and more pressure, gold is having a little more difficulty rallying. This week, the early part of the week, did create a short-term high, We had 9 consecutive days with higher closes than 4 days earlier, so that's a sequential sell setup. You'd expect to see a pullback of up to 4 days, test the breakout, which is what we've seen on Friday, and test the 20-day moving average. Now, in the seasonally positive time of the year, which is this December through February time window, years where it is in an uptrend, it's important that gold not now close below that 20-day moving average. So think of that 1240-ish level as pretty important as far as the futures contract is concerned, more around the 1235-ish area for the spot price.
The U.S. 2-year bond and 5-year bond prices or percentages have now narrowed to the point where the 5-year is actually less than the 2-year. Is that something we should be worried about?
Yeah, a flattening yield curve is one thing that basically precedes recessions, but the key usually is not the fact that it's flattening, it's as it has flattened and starts to turn back up again. So that's really what we need to look for. If you look back in 2000 or in 2000, early 2007, you'd had a flattening curve, but it wasn't until, for example, in 2007, the curve had actually flattened at the early part of the year, and it didn't start to steepen out until you got out into October. And that's where the pressure started to come in as far as the stocks were concerned. So at this point, the flattening yield curve and at the very front end, some inversion is a level of caution. And if we get a bit of a move back up as far as the curve is concerned, that would be for me an outright sell signal. So we'll be keeping an eye on that. It's not going to be a day-to-day affair. It's more of the broad picture as far as the markets are concerned.
Ross, thank you so much for the update.
Always nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Trends Journal publisher Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money, and best of the season.
Yes, and Merry Christmas, Happy Holidays, and pretty soon, Happy New Year.
Coming up to Christmas, who's been naughty, who's been nice, and who gets a lump of coal, although that might be politically incorrect these days.
Yeah, well, look what's going on around the world. People have fed up with the establishment. And you see what's going on in France with the yellow vests. Same thing in Belgium. They picked it up as well. And you have the Five-Star Movement League in Italy. Anti-establishment movement's growing, and it's going to continue into the new year big time. The reality is, behind all of these, is that the equity market boom that began following the Great Recession after the Panic of '08 has only enriched the 1%. And I'm not making those numbers up because right here in the United States, we have 3 people, Jeff Bezos, Amazon, Warren Buffett, Bill Gates. 3 people have more money than 160 million people in this country, half the nation. And according to Oxfam, 8 people have more money than half the world's population combined. So what you're seeing with these yellow vest movements and others are that people aren't making ends meet, and they're going down hard. And so we're going to see more and more protests. It's in country after country, except of course in the United States and Canada, where you don't have that rebellious mood anymore.
In Canada, when people get upset, perhaps you'll get an angry letter to the editor.
Yeah, and in the United States, they'll put on pink pussy hats and go out into the streets.
Can you see those movements so getting to the point where people feel so frustrated at not being able to make ends meet that they'll demand that perhaps there'll be some wealth distribution?
No, because we have the divided states of America. It's identity politics. All you have to do is look at the midterm elections. It was identity issues, no major issues. As a matter of fact, there wasn't even an issue about the longest war in American history going on in Afghanistan, the huge military budgets and the ongoing wars around the world. So no, we just don't have it in this country anymore.
Do you think in Europe they will see changes because of these protests?
We believe that this is the beginning of the end of the Eurozone, the Euro group, and of course that includes the Euro itself, the Euro dollar, the currency. This is the beginning of the end. When will it end? Maybe in 5 years, 10 years, but it's coming. There was, when the Five-Star Movement and Lega, won the elections back in March in Italy, and they were going to nominate an economics minister. His name was Paolo Savona. And it didn't go through because they got a lot of resistance. He's an 81-year-old economist. And he said all that the Eurozone and the Eurogroup have done is make the rest of Europe a colony of Germany. And he's 100% right. Because if the Germans had the Deutschmark, and being one of the largest exporters of product in the world, you'd think they'd be able to export so much if they had the Deutschmark and it was way up there in value? No, the reason they're able to export so much is because they have the euro, and you could buy the product cheaper. So what we're seeing again with these movements, and again within France, it's the beginning of the end of the Eurozone. The people know that only the multinationals have been enriched, and all they are, the average person, are workers on the multinational plantation in Slavelandia. That's all globalization has done. And again, just look at the numbers. 8 people having more money than half the world's population combined. And what's going on in France? How about calling it off with their heads 2.0?
There are rumors the Fed is planning to start raising rates in March to kill the economy prior to the 2020 election. What are you hearing?
No, not at all. The opposite. We were one of the first to say that the Fed was going to ease back on its aggressive stand of interest rate hikes. All this nonsense that you hear in the business media that the markets have been going up and down because of tariffs is a lot of garbage. Because all of Trump's tariffs on China account for the grand total of 0.7% of their GDP. China's in trouble. You look at their car sales. They're plummeting. 6 months in a row. Last month down 13%. The real estate market going down. Retail going down. One indicator after another. Take a look at what's going on in Europe. Italy's moving back into recession. The latest GDP forecast for Germany, the strongest nation in the Eurozone and the Euro group, a grand total next year of 1% GDP growth. Take a look what just happened in Japan with their third quarter GDP numbers, minus 2.5%. Going back to the Fed. The world cannot take higher interest rates. They need more monetary methadone to keep that bull alive. And so going back to the Fed, we believe that they're going to raise rates next week. But now you're looking at Fed fund futures, they're way down. You go back to September. you were looking at very high rates of expectations that the Fed would raise rates 3 to 4 times in 2019. And now those numbers are way, way down. As a matter of fact, let's see here. Fed fund futures are now pricing in nearly 40% chance that the central bank does not touch interest rates next year, and a 33% possibility it lifts rates only once. Markets are pricing in a mere 2% chance the Fed raises rates by the 3 times it indicated in September.
Should we be taking note that the 2-year U.S. Treasury is at 2.72% and the 5-year is actually lower at 2.71%?
Yes, particularly, the inverted curve yield has been an indicator of recessions since they've been doing this kind of math. So of course there's interest in it because the people are afraid of investing in the equity markets and they're looking for safe havens. And it's real. As we keep looking at the volatility in the global markets, let's start. We talked about Germany. What is their DAX 600? It's only down 10% in correction territory. The FTSE 100 down 10%. How about that Shanghai Composite over there in China? Oh, that's only down over 25%, deep in bull territory. Look at the emerging market indexes, the Asian indexes, all in bear territory, down over 25%. There's a global slowdown going. It's in front of everybody's eyes. And again, the only thing that juiced the markets following the Great Recession is unprecedented cheap money. $250 trillion worth of global debt. You can keep pumping that bull with all the monetary methadone you want. At some point, it's going to OD. And the inverted curve is showing that.
Could a gold or silver-backed U.S. banknote destroy the Fed?
I don't think it'll happen. And I don't think that will destroy the Fed. The only thing that will destroy the Fed is if we have a government that wants to do away with the illegality of having a private bank be the controllers of our currency. It's against the Constitution.
Do you think the average person is not aware that the U.S. Fed and the Bank of Canada aren't actually government organizations, but organizations that are, I would say, about 98% private bankers?
Yeah, as we say, Federal Reserve is as Federal Express. No, the people don't have a clue. Hey, did you hear about Stormy Daniels?
What?
I mean, come on, that's what they know about. They don't know this stuff. They don't even know that there's a Federal Reserve, most people.
China in the news? What are you hearing about the situation there?
Again, I just went over it. When you're looking at their GDP numbers, they came in at the lowest level since the panic of 2008. You're looking at their import numbers, their export numbers, their retail sales. Everything is down. The housing market's down. Again, cars are a big indicator. And again, the stupid business media blames the big fall off on auto sales because the Chinese people are worrying about a tariff or trade war. Come on. If you got money, you're not worrying about anything. You're not thinking about this stuff. It's a global slowdown.
Have you heard anything behind the arrest of the Huawei executive in Vancouver at the request of the U.S. in connection to sanctions against Iran? Her lawyer or somebody pointed out, whenever a company is involved in sanction stuff, they get fined, but nobody gets arrested. Is she a hostage in this trade war between the U.S. and China?
Well, it's not the trade war so much. You mentioned the word Iran, and that's the one that we should all be watching, because the United States, Israel, and Saudi Arabia are targeting Iran. It's one message after another. You hear whether it's our Secretary of State, Secretary of Defense, or the President saying Iran's the greatest terror organization supporter of terror in the world. That's not true. The Saudi Arabians, who Trump, Israel, and the United States support, and Canada, they're the greatest threats, as we see it, to support terrorism because of their track record of all the terrorist states they supported in the overthrow of Muammar Gaddafi, along, of course, with the United Nations, and the attempted overthrow of Assad in Syria, and their actions that keep continuing in that area as what they're doing in Yemen. So, but the target is Iran. And so that is what we're concerned about the most. Because right now we're looking at oil prices, as you well know, being up in Canada. We're seeing Brent crude floating between the high 50s and low 60s dollars per barrel. If war breaks out in the Middle East, you're going to see oil prices spike above $100 a barrel. Now let's go back to the dollar. And if the Fed doesn't raise interest rates, the dollar gets stronger and world currencies get weaker, as you can see again with the loonie going down because oil prices are going down. What happens with countries like India, whose rupee is at an all-time low against the dollar and imports 80% of their energy? And what's energy-based? Petrodollars. You got to pay for it in dollars as your rupee is declining at record levels. That means you got to pay a lot more money for what you're getting. That'll be not only the spark that brings on a global recession, it will crash equity markets around the world. So Iran is the one to look for, because when all else fails, they take you to war. And in the United States, Trump is facing real issues here, legal issues. Netanyahu, him and his wife, also facing serious problems in Israel. And Saudi Arabia, as we all know now, is also under attack, even by the United States Senate, which voted not to support it in the Yemen war. So those are the areas that we're looking at that we think can be the wild cards to ignite an economic 9/11.
We'll have more with Gerald Celente when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, looking back at 2018, what have been the highlights?
Well, there were no really highlights. They were more like lowlights. I haven't seen anything positive in the terms of creating liberty, love, joy, and beauty any place around the world. So it's more fear, terror, divided states of America. Again, look what's going on in France and Europe. No, we don't look at the migrant crisis, the human waves that keep flooding into nations as they're trying to escape poverty, corruption, and violence. So it's nothing bright about 2018 that I can see.
What kind of trends do you see for the new year?
Oh, a number of them. We're coming out with our top trends for 2019. They'll be out next week. And, of course, we look at the economy. We look at the human waves. We look at what's going on in the tech sectors and aging baby boomers. It's a wild ride into the future, to say the least.
Globalism versus nationalism. Is nationalism returning the power to the people?
Well, nationalism is the movement and populism, but unfortunately, it's not returning the power to the people in most instances. So, for example, Trump came in on a populist movement because the people were tired of the two-party establishments, but he's certainly not a president of the people. Again, you look at his track record, look at the tax breaks that he gave the big corporations. They used most of that money in stock buybacks, not capital improvements. And according to the Tax Policy Center, 82% of those tax cuts went to the 1%. Take a look at what's going on in Brazil. Same guy they brought in there. That he's another Trump, but a different kind of background, but the same kind of tone. More for the big and less for the little. Same thing in the Philippines with Duarte. So you see it in some areas. In Mexico, of course, they brought in a new president, and he seems more in the populist tone of for the people. But we really don't see the populist movements when they're bringing in presidents that are really for the people. They're for major businesses, the military, and less of we the people.
Do you think when people are feeling hard-pressed, they like authoritarian leaders?
I could be. Because they can't lead themselves, because if they did, they wouldn't have the kind of governments that they have. So I believe they do like authoritarian leaders, and they look up to them, as we just saw it happen with Brazil. And they elected a president, brought in a president over there, and that was a former captain in the military, speaks very violently on a lot of levels about what he wants to do and what he believes. And they want that kind of leadership because they cannot lead themselves. And we're seeing it over and over again. And Bolsonaro, again in Brazil, exploited that populist movement as the people there are trying to get out of the worst recession they've had in 100 years. Same thing with Duarte in the Philippines and Trump in the United States.
Do equity markets around the world look bullish or bearish for the new year?
Totally bearish for us, because there's nothing there that's coming out. There are more negatives than positives. I don't know what positives to look for. Again, we have full employment, but wages aren't going up around the world. It's not only in the United States or North America, it's everywhere. So we don't see a bullish scenario that pushes the markets up, because I was talking about China before. Do you know that 80% of China's GDP is consumer generated? So if the people aren't buying, the economy's not going up. In the U.S., it's between 2/3 to 70% consumer driven. If the people aren't making money, the economy's not going up. So you could have these false ups through the equity markets, but they don't represent the people. So even on the equity market front, now that the cheap money flow is stopping, now that in the United States, Trump's tax cuts are wearing off, and stock buybacks, by the way, are expected to hit $1 trillion, you're going to start seeing a slowdown next year. We believe we're in a stage 1 recession.
And what would that definition be for you?
Look at housing. That's the first stage. The housing markets cannot take even a 5% 30-year mortgage. You're seeing slowdowns in California, Las Vegas, major cities around the country. New mortgage applications, home sales, everything down. Take a look at the builders' stocks, the home builders. They're not in bull territory. They're deep in bull territory. They're down over 30%. So to us, the stage 1 recession is real estate. When real estate goes, you start seeing collapses following it. That's the one we're watching primarily.
Do you think governments are aware of how important real estate is to an economy?
What are governments? You're talking about politicians?
Yeah.
What are they aware of anything? Show me any government, any politicians that's done anything for we the people. They enrich their friends. Morons, imbeciles, stupid, ignorant people that can't think for themselves call the money that politicians get when they run for office campaign contributions. Adults call it bribes and payoffs. What have they done for the people? Look at the clown we got as the governor of New York, Cuomo. Little Andy Cuomo and his arrogant brother Chris Cuomo on CNN. 2 little boys born on third base and thought they hit a home run. They'd be nowhere if Daddy wasn't Governor Cuomo. Look what he just gave Amazon. Jeff Bezos, the richest man in the world, $5 billion tax break so they could build their offices in Long Island City. Give me a break. They're not tax breaks. We, the stupid little people, gotta pick up the tab for that. It's not a tax break. We got to pay $48,000 for each one of the employees. Then what is the government going to do? What government? You got a bunch of morons and losers running and ruining your life, and stupid clowns go out and vote for them. I'm disgusted with the whole system. The only way for me to see the brighter future is to follow the path of Switzerland with direct democracy. Let we the people vote for our future, rather than corrupt governments, Bloods and the Crips, murderers and thieves in a country near you, start wars based on lies, and steal our money to give to their friends. Direct democracy is the only solution that I see to a brighter future. If Switzerland could do it, anybody can. And the numbers of people in the country don't matter, because we can have online voting, blockchain democracy, I call it. If you could transfer trillions of dollars in milliseconds, really, you could vote online. And then look at the stupid, moronic, disgusting, imbecilic voting system that was in front of everybody's eyes in America's 2018 midterm elections. You mean you can't improve that? Again, direct democracy is the only way out that I can see a brighter future. Put the hands in we the people. Oh yeah, we're too stupid. Oh yeah, Nancy out of her mind Pelosi's much smarter than I am. Lindsay, did you come out of the closet yet? Graham, oh yo, he's just brilliant. Mitch McConnell, little Chucky Schumer, you know, come on. Put the hands of the future in the people. This way we will really get what we deserve, for better or for worse, rather than having corrupt politicians decide our future for us.
We'll have more with Gerald Celente when This Week in Money returns.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, do you see people fleeing to gold and silver in the new year?
Quite possibly. We see, again, I've been on your show for years, and you know that I'd call the bottom of gold at around $1,200 an ounce. The low it hit after we made that call was $11.85. We believe gold is near the bottom. And when all else fails, as I said, they take you to war, and gold is the ultimate safe haven. When you're looking at these populist movements and what's going on now, and now we believe we're in a stage 1 recession, go back to the Great Depression in the 1930s. You had the same kind of elements starting to happen. Strong populist movements, nationalist movements, followed by the 1940s, World War II. We're in that kind of environment, and people have lost trust in their governments, and they're going to be losing trust in the equity markets quite shortly. So we believe gold will be again that ultimate safe haven asset that it's always been.
What do you think is going to happen to the U.S. dollar?
The dollar's staying strong because all of the other currencies and economies are so weak. Look at that, we have a $22 trillion deficit, and it's not making a difference. They just keep printing up more money. But what does China have? Oh, they have a $30 trillion deficit. Debt to GDP ratio of over 300. Again, global debt, $290 trillion. Emerging markets submerging. Euro, whether they just came to have the ECB meeting this week, and they're not going to raise interest rates maybe until the summer of 2019, and they have negative overnight rates. So again, Japan, take a look at their GDP. As I just mentioned earlier, third quarter down 2.5%. So the dollar's only strong because the other ones are so weak. And if interest rates go up, the dollar gets stronger.
The range of electric vehicles continues to increase. A new line of pickups slated for 2020 will have a range of over 400 miles. Are we getting close to the peak of vehicles using fossil fuel?
We don't believe so. We think it's many years off. And you look, for example, in China, which is doing everything they can to create more and more electric vehicles. And I think they've sold only about 2 million last year out of an entire car sales of about 29 million. So it's very minor, and we think it's not going to really progress until a new technology is developed that could increase mileage. The battery was invented in around 1800. So we need a new invention beyond the battery to make an electric car, we believe, more sustainable and to do away with fossil fuel. Just like, for example, once upon a time, coal used to be the major commodity used for heating and power generation. And then along came gas and other fuels, oil. You're still using coal. As a matter of fact, coal production and coal usage right now in power plants is at 1998 levels. A lot of the emerging markets are building coal-powered plants because they're less expensive to build and coal is cheaper to use. So even though we've had alternatives for coal for a century, still burning it. And you're going to see the same thing with electric cars. They're not going to replace gas, diesel-powered vehicles for a long time. Unless, again, a new technology comes about that builds a different kind of battery.
Is the U.S. likely to see civil unrest leading up to the 2020 election?
Oh, that's a different one than civil unrest because of the economy going down. Yeah, particularly if they have Trump running for office. Oh, yeah, just talk about the divided states of America. Oh, it'll be, you know, we own the trademark, the presidential reality show. Oh, it'll be the presidential reality show on steroids. It'll be the greatest freak show on earth. There'll be a lot of unrest. It'll be, don't forget to tune in. You'll never see one like that. Again, that's if Trump is still president by 2020.
What are the new trends in health?
They're not very positive in terms of when you're looking at society in general. One of our top trends for 2018, we call it Ready to Explode. And we talk about the obesity and weight problems, particularly in the United States and developed nations. They just keep increasing. And the cost it has on society, particularly as it ties into another one of our trends, bye-bye boomers. The baby boomers now, of course, the leading edge is 73 years old. Not a lot of time left on the planet. They're not in good shape. When you look at the adult population, you have some 70% of them are either obese or overweight. And out of that, about 40% of them are obese. So they talk a lot about health and organic products and different kinds of clean foods and how fast food restaurants are changing their menus, but it's minor. People are still gulping down those sugary soft drinks and eating a lot of junk food. So there's a market for whole health healing, but it's minor, as is organic in the greater scheme of things. Doesn't mean there's not opportunities, but to put it into perspective, the junk foods are growing much faster than the organic market, and people are consuming them at a much greater rate.
In Canada, Prime Minister Trudeau is bailing out the mainstream media to the tune of $595 million prior to next year's election. News releases from the Canadian Real Estate Board are being parroted verbatim by mainstream media. Is mainstream media in Canada and elsewhere past its best before date?
Now let's look at two parts of that.
Yeah.
He's giving private corporations your money. They call it mainstream media. Private corporations. What are they doing? Why should they be getting this money? I mentioned to you before about anybody that calls them campaign contributions, and politicians do something for it. They're bribes and payoffs. So what he's doing, basically, is bribing and paying off the media so they'll be nice to him. and the organizations that he represents. So that's the bottom line to it all. You don't have a free press. It's a joke when you're getting money from the government. You become a prostitute. You're getting paid to put out by your government Johns.
What's the latest for Occupy Peace?
Oh, we're moving ahead in this next year. Next September, we're going to try to launch a Occupy Peace festival here in Colonial Kingston, New York, and this will be the first festival. So music, entertainment, major speakers, vendors, food, arts, crafts, and then we want to start taking it national and global. And anybody that wants to help to make that happen and to bring liberty, love, joy, and beauty back into the world, go to OccupyPeace.com or OccupyPeace.us and put your money where your heart is, because we can't do it without the support of we the people.
How can people find out more about the Trends Journal?
Simple, go to trendsjournal.com, trendsjournal.com. We're coming out with our top trends for 2019 to help you prepare, prevail, and prosper in the year ahead. It's the only place, money back guaranteed, where you'll read history before it happens.
Gerald, thanks a lot for being on the show, and best of the season.
And thank you, and all the best for you.
My guest has been Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, reporting from Japan, James Corbett, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett, publisher of the Corbett Report and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to the show, James.
Thanks for having me on again.
Is Christmas a big deal in Japan?
Well, it's becoming a bigger deal, but mostly just the commercial aspects of it. Weirdly enough, Christmas Eve is kind of like date night here. And other than that, parents tend to give gifts to children, but it's not a public holiday.
Okay. I know the Japanese love to give gifts.
Yeah, it's a part of the culture here for sure.
Yeah, so, yeah, that part of it, why not do that? The Huawei, executive, kerfuffle here, bail hearings and so on in Vancouver, is that getting much play in Japan?
It's getting quite a bit of international play at the moment, and it's an interesting story. Obviously, you will know the on-the-ground Canadian reaction better than I will from my vantage point here in Japan, but I think this is a pretty clear example at this point of the Canadian government basically being played as a pawn between America and China in their trade spat. And new evidence of that is just coming out from a new interview that Reuters did with Trump, in which he intimated that he would be willing to intervene in the case if he thought it was necessary to secure a trade deal with China, which is a pretty startling thing. I think everyone understands that these moves that are being made are part of a geopolitical chess game and a trade chess game that's taking place right now. But to come out and say, the President of the United States, to come out and say he would intervene in this legal process if it meant help securing a trade deal is pretty startling, and puts all sorts of egg on Canada's face, because, of course, they're saying, oh, we're just complying with the rule of law, it's a legal extradition request. But if they are essentially being used as a pawn in a trade chess match that's going on right now. That does not look good for Canada. And of course, it's already, as you well know, is already playing out in retaliatory arrests that are apparently going on of Canadian officials and ex-officials in China. It's getting pretty crazy. And this is not the first time that Canada has found itself in the crosshairs of essentially an American dispute like what we saw recently with Saudi Arabia.
Yes, and Canada really is in a sticky place. The U.S. is our biggest trading partner, and China's number 2. So no matter what you do, you're going to make somebody angry, I think.
That's unfortunately the situation as it's developing, and perhaps Canada is going to have to pick a side at some point or other if things continue the tensions continue to ratchet up, which it appears they are. Even though there are some hopeful signs on the future. One of the interesting stories to come about recently is that Beijing seems to be backing off their Made in China 2025 initiative, a plan that they announced back in 2015 to propel the country into high-tech leadership with dominant positions in robotics, information, and clean energy cars, among other items. Well, they seem to be backing off on that plan a little bit. They're saying, we might postpone that to 2035, and they're trying to downplay it a little and put more emphasis on, no, we're going to start promising greater access for foreign companies, obviously as a type of conciliatory gesture, I think, in the trade wars and trying to ease things off. But then along comes this Huawei situation and throws everything into turmoil once again. So despite everyone's best efforts to try to avoid a trade war, it just seems like it keeps escalating into that. And in that case, obviously, Canada is going to be caught between the U.S. and China.
Could the Huawei executive's lawyers successfully argue that if Trump says if we get a trade deal with China, she could be sprung, that perhaps she's not a person caught up in the justice system, she's being held hostage over the trade situation?
Well, that seems to be what is implied by these statements. I don't know from the legal perspective whether that's going to have any sway on the legal proceedings, but certainly I think we can all read that that's what's that's underlying this at this point. So I think perhaps more likely is going to be some sort of retaliatory gestures on the part of the Chinese. As we've already seen, or as I say, arrests of Canadians in China, I'm sure we'll see some equivalent arrests of Americans as well. And unfortunately, it's very difficult to ratchet things down from there.
When things start to get ugly like that, you see trade relations right away being affected because the BC delegation that went through the rest of Asia, the government officials as part of that delegation went home, leaving just the business people to face the music, so to speak. Is that a wise thing to do?
Well, certainly not in times that are tense like this. So that, obviously, again, these are things that a lot of, I think the business world is taking a special note of, because essentially, as again, exactly as we're seeing with the Huawei situation, they are being used as hostages, prisoners, convenient tools in a much larger trade war that's taking place above their heads. And I think this is obviously something that a lot of officials are going to be talking about and thinking about as they look at these types of trade deals and relationships. And I was just reading recently about the number of foreign expat businessmen in China who flooded into the country over the past 15 years, enticed by the growing potential billion-plus person market of China, are starting to dwindle down and basically return back home with tails tucked between legs, because China did not really open the economy as much as they had been hoping, and things are not panning out. Well, this might make them head for the exit even faster if they start being caught up as basically political hostages here.
Is China's economy slowing down, and do they need foreign investment?
They absolutely require if not direct foreign investment, which again has always been the question of how much are they going to open up their economy, and are they really going to let people in? But at any rate, they do need the trading relationships, and I think there's no doubt that has slowed down. And certainly this year started out with some high expectations in terms of overall global trade and global GDP growth. We are not meeting those expectations, and if anything, there are signs that we are slipping back into a global recession. And I think that obviously relates to the trade brouhaha that's developing right now.
If the global economy slows down because of tariffs, would that be the U.S.'s fault? Or was it going to happen anyway?
Well, as I say, there was a lot of high hopes at the beginning of the year, and at the end of last year, it seemed that global growth was baked into the cake. So that has been removed, and it is a result of these trade wars. Now, obviously, people can argue, well, the Chinese were unfair in the first place, and that's what necessitated this. So it becomes a political dispute as to who you think is really the aggressor here and who's the victim. But at any rate, it is, I think, at the doorstep of these tariffs and trade war that's going on right now.
Could you see China renew its restrictions on Chinese tourists to Canada?
It's a possibility. Again, all of these things that have been used in the past could certainly be on the table, and it's a potential bargaining chip, perhaps, in disputes, not necessarily this Huawei dispute, but things like this that develop from here, because obviously, I think we get the sense this probably isn't going to be the only incident that occurs like this. So it's something that I think could be kept on the table as a potential bargaining chip or tool to say, you know, we will have restrictions, or we will lift restrictions, or we will do this or that. Again, exactly as Trump is intimating he would do in the case of this Huawei situation.
Should Canadians think twice before traveling to China now?
Well, wouldn't want to be necessarily scaremongering about this. I think at this point, anyway, the people who are apparently, reportedly being detained or arrested or whatever is happening over there are ex-diplomats and officials, and one would expect potentially people with business connections there that might be equivalent, so to speak, to the Huawei founder's daughter and the Huawei CFO. But the average Canadian tourist, I imagine, is not going to be affected by this quite yet. But again, that is something that could be kept on the table if this develops any further.
Yes, and it's so easy to be charged with spying because you pointed your cell phone camera in the wrong direction accidentally.
Yes, exactly. These are things that, as we know, it just takes the wrong official on the wrong day and you being in the wrong spot at the wrong time for something to go very wrong. So it's something to at least think about. But again, until we start seeing those arrests happening, I'm not sure we should be making or breaking travel plans as a result of that.
We'll have more with James Corbett when This Week in Money returns.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett, who's reporting to us from Japan. Are the mainland Chinese who have bought up real estate in Vancouver having second thoughts about Canada after this Huawei incident?
I think they would have to at least have some second thoughts about it. But then again, I don't think that generally speaking, a lot of the money that's flowing into the Canadian real estate sector is from business people doing business on the up and up. I would assume these are people trying in some way to get some of their funds out of China, legally or otherwise, and so are probably highly motivated to take such opportunities where and when they can get them. But obviously, I think this has to put some fear into people who are in that kind of sensitive position that they could become the next pawns in this trade war, again, if it develops any further. So I think they have to at least be aware of that. But as I say, most of these people, I imagine, are highly motivated to get their funds out of China into something a little bit more stable anyway. So perhaps they're willing to take that risk.
If the Chinese stock market falls further, could you see people liquidating their assets in Canada, their real estate and using it to cover their margin calls?
It's certainly a possibility, but I would imagine more likely what people have been largely relying on, or at least sort of thinking in the back of their minds, is that the Chinese government, if there's a major rout, the Chinese government will come in and prop up the markets, as they have done repeatedly over the last several years. I think that's what a lot of investors have been hoping for. There's no sign that the Chinese government really wants some sort of massive market wipeout, because obviously, again, that portends political unrest, and that's the last thing that the Chinese Communist Party wants in China. So I think a lot of investors are probably going to hold their breath and wait for the government to come in and help them. If they didn't, that's the point at which you might start to see some panic liquidation going on.
Is there an unwritten rule that the Chinese government won't let its citizens suffer major real estate losses at home?
They're trying that, aren't they? But again, it's the double-edged sword. They want everyone to be able to afford what's the housing, but they want adequate housing, and they want and they want some sort of return on investment for people who are in real estate. So you can't hold all of those things up in the air at once. It's impossible to juggle all of those balls. So something's got to give, and it is a question of what they're going to let give. And my sense is that they are more concerned about people being able to afford housing. So whatever restrictions they have to put on the Chinese real estate market to make that happen, I think they will be prepared to do. And for investors and others, they might have to suffer the consequences of that.
Are people moving into those ghost cities yet?
I haven't heard a lot about that recently, so I have to check on that. I know that the long-term plan, obviously, is for the great migration that's going on right now, with a lot of people coming out of the countryside, and one can imagine those ghost cities are going to be filling up. But I haven't seen any reports on that lately.
What about the overall average person in China? Are they well off, better off, or are there still huge pockets of poverty in the country that we just don't hear about?
Well, poverty relative to what, I think, is the question. And if you're going as to, poverty relative to, say, 30 years ago and the average Chinese farm working peasant, clearly there has been an increased standard of living, but still not quite what we would call well off in the Western developed world. So I guess it's a relative factor. But in terms of standard of living overall, I think it is improving, but still obviously a long way to go. And you still have the, infamous suicides at Foxconn and things like that are reflective of working conditions that are not ideal, shall we say. So again, it's always a question of, is it progressing, and in what way and how much and relative to what? But clearly this is not the living standards we would be acquainted with in the developed world.
Google's offices in Beijing caught fire this week. Is that fire suspicious?
I haven't researched it, so I can't comment one way or another. I would say that it should at least be viewed with an eye towards some suspicion, because again, obviously, especially in the wake of this Huawei brouhaha, one would imagine if there is going to be retaliation, it could be through such type of subterfuge. Who knows? I mean, I haven't looked into the specifics of the fire, so I can't comment on it in detail, but it's something that should at least be kept in mind, especially given the highly sensitive nature of Google and its relationship with China and its known past relationship with the NSA in the United States. It clearly is one of these things where one could imagine a Google, if China really wanted to escalate this Huawei situation, arresting a Google official for spying or something like that could eventuate. So who knows what kind of arson and whatever might be involved in these types of incidents, and should at least be investigated.
There were a lot of demonstrators outside the courthouse in Vancouver at the bail hearings for the Huawei executive. Could those people have been agents, or are there just people who feel that China wouldn't do anything wrong or bad?
They certainly could be agents, and I think in this day and age we would be naive to assume that a lot of these crowds are not rent-a-crowds. That can and does happen, and there are companies that even arrange that have been talked about in the LA Times and others. This is not a unknown phenomenon, especially in this age of viral media marketing campaigns and what have you. It's pretty easy to rent a mob for things like that. It would be surprising to me if people were that, in Vancouver, were that devoted to the dear Chinese Communist Party and their the Chinese overlords. I am highly suspicious that sort of thing would be a simply spontaneous display of love for their Chinese homeland.
We'll have more with James Corbett when This Week in Money returns.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with James Corbett from Japan. James, is China trying to speed up its Belt and Road program, perhaps to boost its economy?
I think this is obviously an essential part of their long-term game plan, but it is, I don't have the sense they're trying to speed things up per se, other than they are already going at a breakneck pace. And that can be seen, I mean, just by searching the news feeds every day for Belt and Road, and you will see no end to the stories of forging trade relationships with this country or that country or investments here or there. As we've talked about before, I think it's interesting to see the development of some beginning of a potential backlash against this idea, which was embraced with open arms, I think, in its early stages, but now people are starting to begin to wonder what kind of strings are being attached to all this money that China is throwing around. So that might present a sort of break on this process. So it'll be interesting to see where it goes from here. Obviously, though, this is long-term, and I don't think China is going to be reaping enormous economic benefits from this in the near term, where presumably they will need it most in the face of these tariffs.
Would Asia and China and Japan in particular really welcome more Canadian LNG?
Yes, well, Japan certainly would. Japan is always hungry for that, and I think there's a lot of potential for development of that relationship. China and Canada, well, potentially, certainly. The ties are there, and as you say, the second biggest trading partner. So there's already a trading infrastructure that might make that facilitate that, although China has quite a lot of other options on the table, including, of course, that giant pipeline deal they signed with Russia just a couple of years ago. So there's other ways for China to secure itself. But Japan and Canada, I think, might be a more fruitful business relationship.
How are relations between Beijing and Moscow?
Well, they're certainly different than they were during the Sino-Russian split of, the 1960s, 70s, 80s. There was, as people might know, there was certainly some distance between China and Russia, even during the Soviet era. But that is thawing, again, because of the situation that China and Russia have been placed in as sort of being distanced and sequestered from the international order as governed by the United States. So that kind of thrusts them into each other's arms. It doesn't mean that Trump and Xi are necessarily best buddies, but I think clearly they are the core of the BRICS or whatever other kind of alternative to the U.S.-led international order exists. And that creates a deepening tie. And I think one of those ties that's quite obvious was the signing of that pipeline deal a couple of years ago. I think that was a pretty big step to show that Xi and Putin are moving closer together on the world stage. Again, I think out of necessity more so than any great love between the Russian and Chinese peoples.
Does China show much interest in trying to slow down its demand for coal?
No, China is still heavily coal dependent, and of course, this is one of the great things that are completely missed out on the global warming narrative that has been placed before the public of the Paris Agreement and other things, which of course we see people protesting at the moment. But the idea that putting a carbon tax on Alberta, for example, is going to have some dramatic effect on the global temperature 100 years from now, rather than, even if we were to take all of the science at face value, rather than, say, China and its construction of coal and coal plants, that obviously I think there's a disconnect there, and it's sort of the unspoken or the unspoken truth that everyone understands and acknowledges. Just the latest, South Africa is exporting 77 million tons of coal towards China and some other places. But these are the types of story headlines that we see on a daily basis. China is still very coal hungry and coal dependent, and I don't think there's any sign that's changing.
Stuart Muir from the Resource Works Society has suggested if Canada wants to really help the world ease its carbon footprint, the more LNG we can ship off to countries like China that use a lot of coal, the better off it is for the whole planet. Would you share that view?
Well, I am highly skeptical of the whole IPCC and the whole narrative that surrounds that. But within the framework of that, if we were just to take it at face value, then yes, that would be the selling point. And so if China was really on board with all of this and the IPCC and the UN and everything that they're saying, then this is win-win for everybody. It's certainly something that they could be getting from Canada, and it would be good for the environment and at least be cleaner. Obviously, Chinese, just in terms of air pollution, just in terms of air quality, this is something that is a well-known issue with China, and that LNG would go some way towards cleaning up. So yes, it's potentially something that China should be looking into. But the question is, can it really handle the energy needs of the growing Chinese economy in the same way that the ready-to-hand coal plants that they already have can? And the answer at this point, at any rate, is no. But I'm sure China could be sold on that if they were enticed more with carrots than with the sticks that we see of the tariff wars right now, because I don't think China is inclined to be taking advice on their energy needs and imports from countries that are basically threatening them with trade wars and tariffs.
James, thank you so much for being on the show.
Thanks for having me on.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, James Corbett, and thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm your host, Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Best of the season, Larry.
Well, thanks, Jim. It's been a good December for us.
You had a couple of interesting news releases this past week. What was in them?
Well, things that we've been waiting on for for the last year and a half. Although there was no way of speeding it up. The first thing that happened is we've just done a MOU with a company out of the Netherlands on joining our two intellectual properties to actually recycle batteries. And I just want to say a little about that. These guys are in the business. They have developed a method of shredding the batteries, and then with their treatments and everything else that goes, and it's not all chemical. At the other end, they come out with a pretty decent powder, and we've been working on that powder for several weeks now, and we're up over 90% recoveries, and so it looks like we could, eventually get up to the 100% range. But the big thing for us is that there's no disassembly of the battery involved, like we're looking at. We'll continue to look at that, but I think this is a huge step forward for us to get involved with them. And so we've signed an MOU, and we'll eventually have some sort of a joint venture or whatever going with them. But I'd just like to talk about their process a little bit. They not only even when you're shredding the batteries, you have to get rid of the power, and they have a methodology of doing that. And this is where a lot of people get stumped, I should say, is finding a method to get rid of the power in a timely fashion. They can. Most people it takes them 6 hours to get rid of the power out of a battery cell, whereas they can do it in less than an hour. Not only that, but that power goes into a storage battery, not into the ground, and they use that power to run their plant. Now that is really a total solution for their plant, and be a total solution for us. So we're excited about that, and we're still working on their powders, and we'll be back in touch probably after Christmas. But currently, what happens is they get the powder down, and they get it down to a pretty clean stage. But at the end of that, the only place they can get rid of it is by sending it to us to be burnt. And this is a solution for most of the batteries out there. And we're bringing something to the table that's is a total solution. And that said and done, we just got our notification within a couple of days. We met with them last Friday, a week ago, and on Wednesday night we got notified that we had the patent allowance from the patent office. And what does that mean? It means that really the patent allowance allows us to, certainly notifies us that they've approved the patent. We got to pay a $500 fee, and then we have to fill out a 20-page form to get the final patent release completed, which is it's not rocket science, and it's not expensive. So that will happen sometime in the new year. But that's exciting, and we announced that this morning, and the stock has reacted favorably to it. I think next year we'll have we had a lot of meetings in this past year with various companies, but I think that's going to, the tempo on that's going to increase. Let's face it, we got the solution. And as I've been saying in my previous podcast, Jim, that there has been no conflicting technologies, and what I'm trying to say, that's excited me. I knew that we'd get the patent at that point. No conflicting technologies means that nobody else is going down our path. They're going down, paths of hydrogen peroxide, solvents, that sort of a thing that, they're dangerous chemicals to work with, and, they just don't do the job. So, we're excited. At least I'll tell you, I'm excited. This is a new step for the company. I see next year is going to be a banner year for us, and our private placements coming together. Everything is happening in a very rough market. That's going to advance this company. The market value of this intellectual property that's going into it will be very significant, and we'll be able to show that on our financials. So. This has been a great week, and of course we got the pilot plant coming. I'll have a little news on that next week, and I have to warn everybody that I'm doubtful whether we'll want to start anything going, because holidays are coming up, and everything has to be shut down. So it's expensive to start these things up, move a crew, and anyway, we haven't made that decision yet, but I'll be saying something about that next week.
Larry, a new report came out of Holland today that suggested there won't be enough raw materials to supply all of these alternative energy sources like wind and solar in the future. So recycling will be the way to go. Is that good news for your company?
Oh, certainly. I mean, they weren't saying this 2 months ago. Now recycling is taking front and center, and we're hoping to take front and center in at least the EV car manufacturing batteries. But I'm glad you brought that up, because utilizing the process at the company in the Netherlands, and by the way, that company is Battery Safety Solutions, and they have an ongoing business. They already have customers in the recycling of the batteries, and some of those, the customers are household words. So we'll get exposure, obviously, to them, and so that will, put the word out amongst we've talked to a lot of these companies in the past, but we're talking to people that are not making the decisions. It's very hard to get to them, but I think that will become prominent for us next year. And this recycling, this return of, the tide has turned. Recycling is no longer considered to be a art that is, there's no money in it. It's not going to happen, to people being much more positive about the recycling in the future. And that starts us off nicely in the new year.
Larry, for people new to American Manganese, what are you all about?
We're a critical metals company that developed a process for treating very low grades of manganese, 2 to 3%, at comparative costs to China in producing, the electrolytic manganese metal and electrolytic manganese dioxide, which is used in the lithium-ion batteries. And we actually took that right through to feasibility, but the price kept falling, and at the end of the day, it wasn't feasible. I'm pretty sure it may be today if we restarted that. And but we've taken that technology, and Chemetco has turned that into a technology for recycling batteries. And so we had a head start. And, it's not something that we just woke up and said, hey, we're going to make recycled lithium-ion batteries. We already had the groundwork done. We spent millions on that, and we spent millions on this new process, and everything is developed perfectly.
Larry, where can people get more information, and where are you traded?
They can get more information at AmericanManganeseInc.com. We have a business plan on there. We have our press releases. We have any other reports that were done for the company or on the company. We have, you can reach us at, we're traded on the Toronto Stock Exchange Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can contact myself at LREAUGH@AMYMN.com. You can phone our office at 778-574-4444, or send us an email.
Larry, best of the season.
Thank you.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on December 14th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.